Job numbers disappointed this morning, but gold still not getting the boost it needs. Joining me now is the editor of the Gold Forecast, Gary Wagner. Gary, thanks so much for joining us from Hawaii.
My pleasure as always. And I do want to congratulate you on the new studio. It looks great, and I expect great things in the future from you.
Thanks, Gary. Well, let's look at gold now. U.S. jobs came out slightly lower than expected this morning. The data boosted gold from its daily low around 11.55. What do you make of the numbers here, Gary?
Well, the numbers themselves, I believe we came out with 223,000. So it was a little bit lower than expected, but it still shows that there is some growth. What I saw happen was it really opened the door for the possibility that the Fed would not begin rate hikes in September or as quickly as first believed, because we didn't have a very, very strong economy. However, we have to underline the fact that the numbers really were moderate. They weren't really bad. They weren't really great. In essence, they were mixed.
So, Gary, you would think that with the uncertainty that we're seeing in Europe and the data coming out of the U.S., that gold would be acting more as a safe haven right now. What do you think is holding gold back?
Recently, we've seen the dollar really have a resurgence again after falling on the index at 100 and then dropping down. So we do have the dollar gaining strength. But the bottom line is that gold has been acting tepid at best. It hasn't been reacting in a traditional safe haven manner, whether they're going to dollars or some other vehicle, or don't see as much of a need, which is another strong possibility. We really haven't seen gold move strongly, and especially to the upside.
So, Gary, as we enter the second half of the year now, what key levels are you eyeing for the metal?
Well, really, with gold right now, we did touch on, I believe it was 11.55 this morning. So we had two lows in place that are really critical or key levels. That 60 area is right where we're at right now. The area below that, of course, is 1140, 1141, and that's a key level of support that needs to hold if we expect any kind of base to be forming in gold prices here. So that would be the support side. In terms of resistance, we're still looking, we've got 92, but 1200, that century mark, and 1223 on the upside. It has remained really range bound. If we look at any of our charts over time, over the last few months, it has been tracking typically from about 72, although we broke below that over the last few days on the downside, and on the upside, just below $1,200. Those are the key levels we need to watch.
Gary, let's look at silver now. Since the start of the year, the metal is down about 1%, but just in the past month, the metal saw a 5% drop. What do you make of silver's price action?
The one thing that I've noticed over the last couple of months is a basic separation between gold prices and silver prices, whereas we tended to see them move in tandem. In other words, both would move up or both would move down. Silver would historically be a percentage gainer in that it would outperform gold on the upside. It would also outperform gold on the downside as it came down in terms of percentage of losses on a given day. But we saw a real separation in which we saw days that we had gold going up and silver going down. My key number that I'm looking at right now is anywhere between, call it 1505 and 1525. I think we still have a ways to go on the downside, but I think we should form a base somewhere in the low 15s if in fact it goes to that area.
Good thoughts from you today, Gary. Wishing you a very happy long weekend.
Want to wish all of our Chartthis viewers a great 4th of July for those in the United States, and peace and prosperity, more importantly, for all of us. Have a great weekend, and we'll talk to you real soon.
Thanks, Gary, and thank you for watching. We'll see you on Monday.